Good
Little
morning,
louder.
everyone. I welcome you all for today's session. Changes made by the Finance Bill 2023 relating to charitable or religious trust or institution. And today's speaker, Dr. N. Suresh, is a graduate in commerce from Bangalore and a fellow member of Institute of ICAI. He did his PhD on the following subject: taxation systems and practices in India, NGOs, NPOs, legal systems and practices in India. He has authored several books and articles on various topics relating to corporate law and taxation. His recent books includes A Practical Approach to Taxation and Accounting of Charitable Trust, NGOs and NPOs 2022 8th edition, as amended by Finance Act 2022. A commentary on taxation of Charitable Trust Act. It's an encyclopedia of income tax law relating to charitable or religious trust or institutions. Interesting issues on charitable trust or institutions, NGOs and NPOs, fourth revised edition, act as a ready reckoner and comprises of around 2,300 questions for practical relevance. A Practical Approach to Foreign Contribution Regulation Act 2010, sixth revised edition, provides an exhaustive coverage on practical illustration on various topics including taxation, FAQs on NGOs and NPOs, foreign contribution compliances, forms, etc. Income computation and disclosure standards, ready reckoner in Q&A format, 7th revised edition, comprehensively covers notified ICDS to be followed by all assessees with a practical approach in Q&A format. He has presented several papers and has given lectures at seminars and conferences conducted by the professional bodies, study circles, various branches of Institute of Chartered Accountants of India, Committee of Cooperative and NPO sectors. He actively participated in various public forums, addressing various issues, and has been a visiting faculty at the National Academy of Direct Taxes, Nagpur and DRTI, Bangalore and Chennai. He was co-opted as a member of Committee for Cooperatives and NPOs sectors ICI. He is also a vocalist in Carnatic music and specialist in KP astrology. We welcome you, sir, for on behalf of all the participants and KCA. And over to you, sir.
Thank you very much, Shashikala.
Yes,
First,
sir.
let me at the outset thank the KCA for giving me an opportunity to present on the changes made by the Finance Bill 2023 relating to charitable or religious trust or institution. So now, friends, this the provision relating to charitable trust or institution, every year, commendable changes are being happening. Even in 2020 and 21, we have seen that substantial changes have been made, even in 2022. Again, in the Finance Bill 2023, quite a number of changes have been made. The changes made comprises of the procedural changes as well the substantive changes. And some of the substantive changes made have been brought up, which is very harsh as well as the charitable trust or institutions are concerned. So when I dwell upon each of them, I would point out to where that there is a harsh nature of these provisions. Then in respect of the changes have been made in Section 1023C relating to educational institutions or hospital. Again, changes have been made in Section 11, and changes have been made in Section 12A. Changes have been made in Section 12AB, 80G, and Section 115 TD of the Income Tax Act. And while looking at these changes, Section 11, 12A, 12AB, the changes which have been made in these provisions, more or less similar changes have been brought in Section 1023C, because in Section 11, 12, 12AB and all that, either provisions or sub-provisions has been dealt in. Whereas in section 1023C, provisos has been brought in. So those similar to those in section 11, 12A, 12AB, same thing has been brought in changes in the provisos of section 1023C. And then also the changes, similar changes of 11 has been made, 12A has been made in section 80G also. So now I will go over to the brief of the changes made. Go to next slide, Shashikala. Next one, please. Now, first is, let me deal with the changes made in section 11 of the Income Tax Act. You know, the section 11 is a charging section as far as claiming an exemption is concerned. So section 11(1) specifies that the income derived from the property held under trust to be applied, and the yardstick has been specified about 85% of the income to be applied. So if there is deficit of spending 85%, then section 11(1)A explanation as well as section 11(2) deals with the situation. So there are two situations which arises. One is when the income is not received by the trust or institution, because some of them would follow the accrual system, but actually the income has not been received. In such a circumstances, difficulty was posed that they may have a difficulty in applying the income to the extent of 85%. To enabling the such situation, that law was amended earlier, where Form 9A has been brought in, where the income is not actually received, then they can file Form 9A. And in case of where the income has been received in the second category, but could not be applied for charitable or religious purposes to the extent of 85%, then in such cases, there is a provision which they can accumulate the income by complying the rules framed thereon, and procedural requirement has to be complied with that. Now, the earlier position was what time limit that this form number 9A and 10 to be filed. In the earlier position, that before the due date specified for filing the return of income, form 9A and form number 10 could be filed. So normally that in case where there is an audit, the normal time specified under 139(1) was 31st of October, where you have to upload your audit report by 30th September. And now, because the changes proposed in the Finance Bill 2023 is that Form 9A and as well the Form number 10 has to be filed 2 months in advance. That means if 31st October is the due date for filing the return of income, then you have to file on or before 31st of August, both the forms. So therefore, you must caution most of the auditors have to caution their clients to get their books of accounts audited well on time so that it would facilitate for filing Form 9A and 10. So the first time limit for filing form number 9A and 10 is advanced by 2 months. That means it has to be filed on or before 31st August. Secondly, changes is with regard to in section 11, treatment of application of the corpus. You know, in 2021, substantial changes has been made with regard to corpus. The corpus donation received towards the corpus should be remained intact in a prescribed form or mode as prescribed under section 11(5) of the Income Tax Act. If there is any dilution in the form of investment, then to the extent there is a dilution, such dilution would be treated as if it is applied. Then from the total application of the income, to the extent there is a deficit or diverted, will be subtracted to arrive at the application of income. And the law provided was that in case they put back this corpus fund in a prescribed mode, under section 11.5, the year in which they put back this again, then in such circumstances would have been treated as an application of income. Now the law is changed in 2023. What it was proposed? The proposal was that in respect of corpus donation, there should be no violation. So now they say when you have applied the corpus fund or you have diluted the corpus fund, then the year in which you diluted, there should be no violation. What are those violations? Firstly, that corpus has to be separately identifiable. If are not identified, then even if you apply, it will not be, even if you put back the money, it will not be treated as an application. One says that no intercorpus donation can be given out of the corpus donation. And the third condition was that wherever there is a requirement of compliances of TDS and other provisions like cash payment, etc., and all that has to be complied with. If this is not complied, then when the money put back to the corpus, it will not be allowed as an application. And the next condition like excess application of the earlier year should not be allowed to be set off. Okay. And another important condition is when the corpus fund is used, then it should not have been used. No part of the income or property of the trust or institution is applied for the benefit of specified person. If you have used this money for the benefit of specified person, then when you put back the money into the corpus, but it will not be allowed as an application of income. Then another important condition brought in here is that in any case, you have to put back in the specified mode within 5 years. If you do not put back the money within 5 years, then benefit of treating that as an application when you put back will not be allowed. Okay. Then earlier there was a lot of issues were raised whether these provisions which have been brought in 2021 Act, whether it would apply to the earlier assessment year, because many assessing officers has continues to look at that the similar treatment should be meted out even for the earlier year prior to the 2021. Now the law has made it very clear by bringing a provision, non-applicability of the provision, says that the above provision will not apply before 31/3/2021. Go to the next slide, please. Similarly, in case of what we have spoken about the corpus donation, similarly in respect of the loan borrowed, the law changed in 2021. If you borrow money and you make it and apply this for charitable religious purposes, to the extent that you borrow and apply will not be allowed as an application. Only the year in which you repay the debt, that will be treated as an application. Now, similar to the corpus fund, which will be put back to this in a specified mode of order, now they say certain conditions, what we have discussed with the corpus condition, same condition that they have brought in. In other words, that wherever TDS which ought to be deducted ought to have been deducted. No part of the income of the trust or property of the trust should be used for the benefit of specified person. So by adhering to this condition, if you satisfy, now on the repayment of the debt, it will be allowed as an application. If these primary conditions are not satisfied, even if you repay the debt, then such debt will not be allowed as an application of. Then, now there are certain substantive changes that they have brought in such a level in explanation. See, the deduction for the donation to others, that is called inter-charity donation. The inter-charity donation means the donation from one institution to another institution, one charitable institution So when there is a donation from the one charitable to another charitable, donation paid or treated as an application of income. You know why it should be treated as an application of income? There are quite a number of judgments of the Supreme Court in the High Court system. The Supreme Court in respect of CIT versus Sanjit's case in 239 it says that when the trust or institution could not apply the income, but they can give a donation to another trust which they can apply the income. So such donation pay were treated as an application of income. So now the law proposed to be changed in 2023 finance is that only 85% of the donation paid will be treated as an application. And most of the institutions felt sad to hear about it because they said that when we pay the entire money, why it should not be treated as an application. But there is a logic to this. What is the logic? See, suppose, for example, you receive 1 lakh donation from somebody. Then out of this 1 lakh, while computing the income under Section 11A, there is a judgment of the Supreme Court. It says in CIT program committee case, which says that 15% of the exemption should be allowed on the income. That means you have to apply only 85% of what you have received. Okay. Suppose when you receive 1 lakh, 15% is exempted. There is a blanket exemption. So that means 85% that we have to apply. That means from 1 lakh, 85% we apply for charitable purposes. Now, when you give as a donation to another trust or institution, say 1 lakh. Now, for a trust, what happens? First, they will get the benefit of blanket exemption at 6,1148, not exceeding 15%. Okay. Then when you pay 1 lakh as a donation to another trust, the total combined effect is you will get the benefit of 1,15,000. So now to neutralize this situation, I was amended, only 85% which you ought to spend will be allowed as a deductions for inter-charity donation from one institution to another institution. Then the next change is made in Section 11, one code of exemption, because this is a consequential amendment arising from the decision of the Supreme Court in Ahmedabad Urban Development Authority case. And also there is quite a number of issues were discussed by the Supreme Court. When you have registered under Section 12A, if you are also falling under Section 1046A, you can claim the benefit in one of the provisions, not under the both. So therefore, this consequence will under the provision. For the next slide, please. Now we will move on to the changes made in Section 12A. Shashikala, move to the next slide. Changes made in Section 12A. Now, this 12A, there is a Section 12A1AC. So 12A1AC deals with making an application for seeking a registration, which is a mandatory requirement, claim exemption, 11 of them. Now, Section 11, 12AC, 1AC, there is a Roman letter 6 deals with in any other cases, because you have a list of subsection, subclass 1, subclass 2, subclass 3, and all that. 6 deals with any other cases not falling into the other area. Now, when you file an application for as any other cases, then you have to make earlier provision for. You can make an application 1 month before the commencement of the application. Now the law proposed to be changes. There are 2 situations that they have brought in. One is those trusted institutions which has not commenced its activity. Then those trusted institutions which has not commenced its activity, they can file application for seeking registration at least 1 month prior to the commencement of the activities they're taking. The second category is that those trust or institutions have commenced the activity, but no income or part thereof of the trust institution has excluded from the total income under section 1023C or section 1112 of the NBS. Those which are those of the income not excluded from the total income, they can file an application for seeking the registration only after the commencement of the activity. In this regard, it is very important to go back to the earlier. There are catching of decisions in this regard. Question came up while making an application for seeking the registration, whether commencement of the activities or carrying of activities was required or not. Because section 11(1)(a), section 12(a)(1) deals with the situations for making an application, and 12(a) deals with the procedure for registration and all that. There in section 12(a), the power vested with the commissioner or principal commissioner of income tax was that he has to satisfy that the trusted institution having charitable or religious activity, he has to examine. So by looking at the trust deed, he has to understand that the objects are falling within the charitable activity. Sorry, go back. So charitable activity. Once he is satisfied that there is a charitable activity, second condition imposed was that he must satisfy that they had carried out the genuine activity. So genuine activities and carrying the objects and genuine activities were looked at parallel by the department. In case those institutions or trusts which have not carried the activities, department resorted not granting the registration, finally led to the spate of litigation in the court. And most of the overwhelming majority of the court said that in case startup institution, there was no requirement under the law that they have to carry the activity by looking at section 12(a)(1) as well as section 12(a) of the Income Tax Act. Now, clearly they have brought up. When you file as an application for seeking registration as in any other cases, either you have commenced the first is whether you have carried the activities, whether you have commenced the activities or not. If you have not commenced the activities, time limit has been brought for making up. And those which have commenced the activities, but income was not excluded, then they can make an application at any time after the commencement of such activities which entails for an exemption under section 11. This is the important change. And another important change is primary condition as contained in section 12(a)(1), BA has been brought in. Because if you go back to section 12(a)(1), which deals with the primary condition, that means condition as enumerated in section 12(a)(1) has to be complied with, without which section 11 and 12 will not apply. Now, in 2015, the law was amended, saying that those charitable trust or institutions to claim an exemption in case of accumulation of income and all that, first they have to file the return of income and file the upload of audit report, and filing of accumulation income should go parallelly together within the specified time. If it is not complied with, then accumulation will not be allowed. Again, in 2017, law was amended, saying that filing of return of income has become a mandatory requirement to claim an exemption. Section 11 of the Income Tax Act. Now, at that point of time, issue was raised whether charitable trust or institution can file return belatedly. Still, are they obliged to claim an exemption under the Income Tax Act? Because law was not very clear in this. In fact, many courts have said that the belated return could be filed under section 134. It would apply to the charitable trust. But after the amendment made in 2017, law was not very clear, because even the CBDT has not clarified this effect whether belated return could be filed. Though that the CBDT has issued a circular stating that if there is any delay, either in filing the return of income or submitting or uploading form number 10 or uploading the audit report, condonation delay can be sought from the jurisdiction Commission of Income Tax or Commission of Income Tax. Now the law has been made it very clear. This is a welcoming amendment made in this finance bill. It says that you can file the return for 139(4) deals with the filing of return of income in belated. That means belatedly you can file a return of income within the time specified under section 139(4). This would apply to the charitable institution. Go to the next slide, please. Now changes made with regard to section 12AB. Section 12AB of the Income Tax Act deals with the procedural requirement for providing an exemption, providing the registration. Okay. So now insert quite a number of changes that they have brought in section 12AB. And most important changes is with regard to any incomplete, false or information in the registration application can attract the cancellation of registration. Then suppose earlier arena that you have filed the application and sought a registration. When you go for the renewal of application, or when there is a modification which you file an application, or when the provisional registration which you file an application, then from the data which emerges says that the earlier application which you filed or the information which you have filed in the application is incorrect or incomplete or false information, then such cases it will be treated as a specified violation. When it is treated as a specified violation, power is vested with the commissioner or its specialty to cancel the registration. Not only they reject the application, but power is also vested with the cancellation of registration. Therefore, abundant caution to be taken while submitting the application for seeking the registration. If there is a blatant mistake or error in providing the information, it may result in not only rejection of an application, but cancelling of the registration also. So normally the cancelling of registration, once the renewal, when they go for the renewal of application, when they already got the registration, when they go for the renewal, when there's a modification object for which you are seeking for approval for modification of object, this would apply. Secondly, that when then power is vested with the commissioner to reject the application in the circumstances as explained in section 11 with a bracket 7. That is one codification. Suppose you have parallel, assuming that you have registered under section 1023C, you also have been registered under section 20 of the Income Tax Act. Now you have to seek an exemption in one of the provisions. Once you elect that you are claiming an exemption under particular section, then you should continue to claim an exemption only in that particular section. This provision was brought in by Finance Act 2014. And now also they have made it very clear, if you make an application, once you started claiming an exemption under section, if you switch over to the other, then power is vested for rejection of an application. Again, the rejection of application applies in case of application filed under section 12AC, 12(1)AC, 6 in case of any other cases. Now with all this, there's the transition provision they have brought in. That means those who have filed an application prior to the commencement of these changes, because these changes are effective from 1st October 2023. If you have filed an application prior to this amendment, then those who have filed it, the benefit of exemptions, benefit of approval will be given by the Commission of Income Tax. Go to the next slide, please. Changes made in section 80G, the application for seeking the registration.
under section 80G, similar to those which I have dealt with section 12A1 AC. Again, that they have brought into that those trust institutions which have commenced the activities, those which have not commenced the activities. That means the provisional registration prior to the at least 1 month prior to the commencement of the activities to be filed, and in case those which have commenced but their income is not excluded, only when they actually carry the commenced activities, which are entirely foreign exemption, then they can make an application for seeking the registration. So more or less what has been said in section 28 equally applies in case of the ATG. In addition to that, in the section 80G2, 3 categories of the donations has been deleted. That is Jawaharlal Nehru Memorial Fund, Indira Gandhi Memorial Fund, Rajiv Gandhi Foundation has been deleted and section 80G2 of the Income Tax Act. Go to the next slide, please. Now, there are quite a number of changes has been brought in respect of section 115 TD. Section 115 TD, which deals with accredited tax. Now, this accredited tax under the changes made by the Finance Bill 2023 clearly states that those who have not applied for registration or expired, not sought the registration, then 115 TD will apply. Just to give you a brief note of 115 TD. See, once you have been registered under the provisions of the Income Tax Act to claim an exemption, that means you are carrying the charitable or religious activities. Once the form changes from the exemption to a non-exemption, when the different forms as explained in the section 115 TD, then the exemption will not apply. Once the exemption will not apply, then 115 TD will apply. The effect of the 115 TD is that the property or the income of the trust will be the income will be arrived at by taking the value as per the financial statement, the value will be arrived at minus liabilities of the as of the date, then the net result will be an accretion that accredited on which maximum marginal rate of tax applied on. So now the law change was those who have been registered but not renewed, those who have been registered, say for example, you have modified the registration options, and which you ought to have applied for re-registration for the modification of that. If you fail to do so, then the time that you fail to do so, then from that time, that 115 TD will come. This is very, very harsh on that. Again, under section 12AB, which I said that those where there is an incomplete application or false information, this is very, very hard for the charitable trust fund institutions. Okay. Now we'll come back in 1020 to proceed. In fund or educational institutions. Shashikala, will you go to the next slide? In case of section 1023C, those which apply for a fund or educational institution or a university or a hospital, certain conditions are met. And those institutions, again, the procedure for making an application and seeking the approval has been dealt with that. What we have discussed in section 11, section 12A1, section 12AB, similarly have been brought in different provisos dealing with section 1023C. Okay, so what I have said in those provisions equally applies to section 10 cases. And also here the transition provision they have brought in. That means when you make an application for secret registration, if you have filed it prior to the commencement, prior to the application of applying of this provision, that is from 1/10/2014, 2023. Then those who have made an application, then this provision, they will take into consideration the Commission of Income Tax Audits to dispose the application as you filed prior to this 110. Again, in respect of the cases, any other cases, rejection of applications, the power has been vested with the commissioner to reject the application. So overall, to say that the changes made by the proposed by the finance bill, there are certain substantive provisions which goes to the rule, like the payment of donation of only 85%. Earlier we were enjoying 100%, now it is limited to 85%. And those were incorrect or incomplete or false information, not only rejection of application, but cancellation of registration is very, very harsh. So Shashikala, go over to the questions. If the members have any questions, they can.
Dear participants, I just request if any Q&A, please post it in the Q&A box, please. We are open for Q&A session.
Any questions are coming up, Shashikala?
Not yet, sir. So we'll just at least wait for 2 to 5 minutes. If any question if comes, I'll just read it out. There is one question which has come up. In case of trust formed before 2020, which have not applied for new registration, what will be the scenario now if no activities are happening? Hello? Sir, am I audible? Hello?
So here is the question. In case of trust formed before 2010, which are not applied for new registration, what will you do if no activities? Again, that you have to go back to this changes made in section 12A, 1AC, where if you are not applied, you can again go back whether have you commenced the activities or you are not commenced the activities. If you have not commenced the activities, again, provisional registration is the time at least 1 month prior to commence. If you are anticipating that you would start the activity in anticipation, 1 month prior to that, you can take an application as any other cases. You can still apply this. Then second question, can they apply for registration, provisional registration now? Those who have sought the registration in the earlier provisions which they have not, they can go for the registration, re-registration can be applied. Because if you do not apply for re-registration, then 115 TD would apply as per the changes proposed by the Finance Bill 2023. Now there is another question saying that In case of any amendment in trust deed now, should we go for approval of IT? Now, see, because there's quite a long time that there was a debate. When there is any objects clause or amended in the deed of trust, whether should we seek the prior approval from the Commissioner of Income Tax and all that. There are quite a number of judgments. Finally, the judgment of the Supreme Court in CIT versus Kamala Town Trust case came in. It says that there is no mandatory requirement. Seek the approval from the Commissioner of Income Tax because Income Tax Department is not a party to the deed of trust. So now in 2000, subsequently law was amended. The law was amended saying that whenever there is a change in the objects in the trust deed, then you have to, within the specific time, you have to apply for seeking the modification of object approval. So therefore, you have to apply, you need not go to approval of the IT board. Straight away on the prescribed form, you have to apply within the 10 specific day for seeking the registration for the amended objects in the trust deed. See, now it warrants only when there is changes in the object. If there are clauses which are administrative in nature, if you have changed with those aspects, then seeking amendment, seeking the approval from the seeking modification of objects question does not arise. Only those modification objects where earlier when you got the registration for certain object, then later on that you made some amendment to this object, then only it requires for modification of object seeking the registration. Okay. So there is another question. In case of any changes other than objects like changes in the register, addition of trustees can be done by trust without any prior approval. Yes, there is. It does not warrant for you to seek any approval from anybody. Even there's a, you need not even file an application for seeking those changes also. Only in case of foreign contribution act, there is a requirement for you to comply. Specified form has to be uploaded or filed within the specified under the Foreign Contribution Regulation Act 2010. As far as the Income Tax Act is concerned, does not require any prior approval. So there is another question. The question is with regard to in case of charitable give another charitable interest donation, kind example, an ambulance to say what are the consequences for the owner? See now this, the donation could be given either in kind or in cash. Cash in the sense, any mode of payments. Other than cash is only small extent is allowed. Now when you give as a donation, for example, in kind, you can, there are no restrictions. Now only thing is whether 85% will be allowed on such donation is a question which we need seeking the clarification from the CBDT with regard to in kind. Suppose you give away the ambulance which is worth about say 5 lakhs of rupees. Now as per the provisions which has been brought in the finance bill, only to the 85% to that extent will be allowed as an application. Whether this would apply in kind or not, the language is not clear. Okay. Then there is another question, says, in case of schools, are they allowed to take donation from the student and should it be necessarily considered as income? See, now you should be very careful when the donations are received from the students or the parents of the student. There may be a tendency to look at from the angle of capitation fees. If there is if it falls or trapped under the capitation fees, then as per the judgment of the Supreme Court in KMAI cases that then your exemptions may be cancelled. The registration may be cancelled and the exemption may not be allowed. So therefore, because capitation fees which have been dealt in a line and length in the judgment of the Supreme Court. So you should be very careful. And recently there is a judgment of the Karnataka High Court also. Please focus on this before you collecting the fees from the students, warned about the fees. So friends, if you have any other questions, please revert back.
I think no open questions, sir.
I hope that there are no other questions. So I thank all the viewers, I thank the friends for again for giving me opportunity to share my thoughts on the proposed made by the Finance Bill 2023 relating to charitable trust institutions. I thank all of you.
Thank you so much, sir.
On to Shashikala.
Yes, sir. Thank you so much, sir. Actually, it was a very wonderful session, to be frank, because there are a lot of amendments going on, and specifically, somewhere we will be like ignorant of the charitable trust amendments, actually. So, if we take that into consideration, I think you have covered nook and crook of every corner of the finance bill amendment, whatever has been made in the proposed bill. We really thank you for accepting our invitation for and behalf of Karnataka State Chartered Accountant Association for accepting our invitation and concluding the session with a great success. And I thank all the participants for attending this event, and also thank our President Shri Pramod Shri Hari, and also the Chairman of Direct Tax Committee Shri CA Deepak Chopra, and all the members of committees and the technical team for making this session a great success. And I request all participants and panelists and others to attend today's evening session, which is we are having at 5 p.m. today. It's also a short series on TD